Africa has a huge opportunity for agri-investment and some big challenges. The opportunity is not difficult to understand. The world needs food, and Africa has a lot of natural resources that can provide that. However, there are a lot of challenges. In the international investment community, the investors we talk to, the pensions, the endowments, the family offices, do not need to invest in Africa. It's a small investment market, and there are negative biases, which we believe are overplayed. And the challenge is overcoming those biases through a process of education to draw in the capital. In terms of what we've done, the first step, I agree very much with the first speaker. Structuring an investment is very important, and structuring it to international standards with strong corporate governance, adequate due diligence, fee transparency, eliminating the conflicts of interest. It's very interesting because on one hand there is money there are an abundance of projects, but what our investors tell us is there are only a few projects that are being structured to meet the requirements of international investors. The second key point I would say is education. There are a lot of misperceptions about Africa, and we need collectively or individually to convince them of the truths. The fact is, private equity in Africa has been the highest returning private equity over the last 5 years. I would say the majority of investors do not know that. The fact is, if you look at the long-term trends in terms of political stability, corporate governance, return on capital, the trends in Africa are very good. People have been mentioning the BRICS, and I'm fortunate, I'm a former partner at Goldman's, and I work directly with Jim O'Neill, who was the individual who coined the phrase BRIC, and I've been encouraging him to initially add A to BRIC. And I don't know if you saw it, but there was an FT article on Friday for the first time, him publicly talking about BRICA. And this education process needs to happen. I'm an American, and this year we're making one of the largest foreign investments in Zambia. And I have to honestly admit to you that 4 years ago, I could have not located Zambia on the map. When I talk to investors, the perceptions of Africa are sometimes tainted by a few minority situations or a few minority issues in the governments. And we need to educate the community that the reality is very different from that. The third point I would say is you need to understand your client. The DFIs are very different than the pension funds, are very different than the family offices. And we need to understand that and structure the investments to meet their needs. And the fourth point I would say is persistence. I would say it's maybe more challenging to raise capital right now than the initial speaker on this panelist. But you have to be out there telling the story continually to educate the common investor about the attraction merits. In terms of steps, Africa is very unique. Again, we operate in Europe. We have so many tools available to us through development banks, through the World Bank, to structure transactions that reduce the risk for our investors and help draw in the capital. As an example, we work very closely with MIGA to get political risk insurance and the guarantee of our contracts through the World Bank. That's in Zambia and Botswana. You will laugh at me because you will say, why do you need political risk insurance in Zambia and Botswana? And we thought very hard about whether we should pay the premiums for that. But the fact is, for drawing in the foreign capital, that has proven to be very important. If you look at what the Obama administration is doing in terms of agricultural incentives, credit guarantees, there are many tools available that almost create an arbitrage for the equity investor into the projects, and those can be used more. Second point, DFIs. We hope to announce that we will get a major funding from the DFIs, so I don't want to speak too negatively. But I do believe that there are two things that can be done better. The established private equity funds are often very reliant upon DFI funding. And in my perception would be very good if those funds worked hard to diversify and bring in different types of capital into the market. Conversely, I think the DFIs should not only encourage development financing, but work with up-and-coming managers to identify the proper managers and support the managers at an early stage. It would have been very difficult for us to launch in Africa. It's taken 2 years of heavy investment. If we didn't have an established business in Europe, we could not have done it. The third point is government policy. There needs to be a stability of government policy, whatever it is. If we have stable government policy, we can price the risk. What investors cannot and will not price is uncertainty. From our experience, investors are just starting to look at Africa, but they're looking at it seriously. And there is a lot of potential if the industry collectively provides attractive investment product to these investors.
Doing business in Africa, you can't afford to be without Africa Investor.